Welcome to Hit the Brakes, where we dive into the top stories, market trends, and ins and outs of the supply chain. No matter if you're tuning in from the cab of your truck, behind your desk, or on your daily commute, we're glad you're here and we're ready to serve you. Let's get this show on the road. This episode is part 2 of our 3-part series from the Freight Forecast, Truckload Rate and Market Trends webinar with ACT Research. This episode is all about supply conditions in the 2024 freight market. Make sure to join us next time for part 3, when we will bring all this together and talk about what the data means for you.
When we look at the data from the manufacturers, what we're seeing right now is lower demand, and that's what you would expect after the down cycle we've had in rates. And frankly, we would have expected it sooner, but there's been a lot of pent-up demand post-pandemic for supply chain resilience. We think private fleets have been adding a lot of capacity. We think that there's just been a number of factors that are different this time. There was just all these supply chain constraints coming out of the pandemic. And so we had this very long extended backlog, really going up to about 6 months ago, really, that we had a lot of excess in the backlog. So if you look at the U.S. Class 8 tractor backlog chart on the top right, you'll see that there's about 100,000 units in there at the moment, and it's about 5.5 months long at the current build rate. Now, as an estimated build rate, we actually just got December build rates, and it was higher than we expected. So that actually pushes down on the backlog to build ratio. So it's even probably a little bit lower than 5.5 months. That's on a monthly number that's going to bounce around a little bit, but we think that maybe to simplify it, net orders for new Class 8 tractors were about 30% below sales in 2023. So we expect a roughly similar decline in sales in 2024 from 2023. So we're going to add fewer trucks, and you can see that on the right hand side of the bottom chart. Sales have already started to trend down, and once we get to sort of a replacement level, which is in the low teens of thousands of sales per month, that takes away the supply additions that have, in our view, been pushing down on freight rates. And so when you remove the weight on freight rates, we think that's a very significant change in the overall market dynamics, and probably puts in the bottom of the cycle.
Q3 and Q4, the new orders that came in, I think for some at least was fairly surprising. It's much higher than what you would expect for this, such an unfavorable market for carriers. As rates are going down, maybe the CapEx starts to slow down. You would assume, kind of associated with that. But I'm also curious. You kind of mentioned a lot of these things. The supply chain crunch. Just kind of quick anecdote. The semiconductor shortage. And trying to understand how much of an impact that's having on these elevated new order rates, compared to where we're at in the market. There were a number of trucking firms that I recall speaking to at that time that mentioned, do you want your truck or do you want a truck with power windows? And they were literally facing the decision of, do you want to have a crank window and kind of forego some of the semiconductor requirements for that new truck order? How much of this is maybe associated with some of that trauma and trying to get through even individual firm, supposed backlogs of what they would anticipate to add on capacity, or what else could be driving this?
Well, yeah, that's a good question. There's a few different things going on. I think one of the things that we did see in Q4, even very recently, was one of the OEMs had some labor related issue. One of them is UAW, and that maybe caused a few hiccups. There were some a few part shortages, more on structural components. I think the semiconductor issues are, as far as I know, largely handled at this point. But there have been some supply chain snags here and there, and then we sort of saw a surge into year end. So somewhere someone sort of made up for it. And one of our hypotheses around here on why we saw such a strong end of the year in terms of truck production, which beat the manufacturers' build plans by a few thousand units in December, One of the ideas is some of these California regulations that go into effect January 1st, 2024, that will retroactively go into effect once they get the EPA waiver, which hasn't been granted yet. So we'll see on that. But the Advanced Clean Fleet rule in California does limit the fleet's ability to buy certain types of vehicles in the future, and so there was a lot of demand for them last year.
Essentially, they're getting ahead of regulation requirements on equipment.
Yeah, one of the rules in the ports in Southern California as of this year is that you can no longer register internal combustion vehicles at the ports to go in and out of the ports. So anything that's already registered is grandfathered in, but the new vehicles from here on have to be zero emission.
Wow, that's really interesting.
As we talked about, Tim, I think this is probably my favorite slide right here, the one on the right, particularly. I think over the past year, everyone has been hyper focused on operating authorities, DOT operating authorities, and really trying to understand, well, what does that mean for overall capacity? Are operators closing down and then leasing on with a larger fleet, or the drivers just driving different trucks, or what's going on there with overall, how's it actually impacting capacity? And ACT has the driver for hire index. It really paints a picture of driver availability, which is really what it's all about. So what can you tell us here? I thought this one was really interesting, and would love to just better understand where, according to this, where were we and where might we be today and where might we be headed. So
yeah, this one really kind of it ties it all up really nicely. And I think Brett and our idea was when to put these together is to point out that as people are leaving and operating authorities are contracting, what has been happening over the past year is that a lot of these drivers have gone to the big fleets. And what our for hire trucking index represents is we've got several dozen big fleets who respond each month and kind of give us a sense of conditions on a number of factors, but we think driver availability is one of the most important outputs there. And actually, just like a couple hours ago, the December number crossed my desk, and so I can actually report. We've got what I can say just to set this up is that we've had really good driver availability. That's been sort of the sort of bane of the spot market, if you will. It's been very tough to operate in the spot market, frankly, because the fleets are pretty full in terms of their trucks, and and there's not a lot of freight sort of spilling into the spot market, but we've started to see a trend change just the last few months where those 60 readings gave way to 55s, and the December number was 50.9. So dropped a few more points. Now at that pace, we're going to be in a tight market by Q2 of 24, like soon. So I think that's fascinating. The benchmark I would look at on this chart, I know 50 is where we kind of put the midpoint, and that in any diffusion index, that's going to be your zero or neutral line. But given that it's always difficult to find drivers, the average over the long term on this index is about 40. So I would suggest that until we get to around 40 on this index, we're not really in a tight market. But anything below 50 certainly is a lot different from what we've been seeing, and suggests that we're going from loosening to tightening. And so I think that's sort of the most important piece. The operating authorities piece is it's great data in some ways, but it's also deeply flawed in some ways, because we're still working on how many trucks per fleet there are, and that number does swing around a little bit. It's tough to get a real precise sense of capacity just looking at the operating authorities. And there's lots of different types of fleets in that operating authority data as well. So directionally, I think it's helpful and tells us that at the margin capacity is already tightening. And then when the driver availability index starts to actually tighten, that kind of closes the loop, if you will.
So Tim, basically, and I think the operating authorities, receives a lot of reporting, a lot of headlines. Obviously, and you can see in the chart, through the pandemic, you saw this historic rise of operating authorities, unlike anything that's seen in modern transportation history. And now on the tail end of this Black Swan event, we're seeing something pretty similar to that to the downside. And I think one of the narratives that's accompanied this, seeing how severe, the drop in net revocations and net authorities is coming is that, okay, the drivers are exiting, the equipment's exiting. We should be entering into another, upward market. And I think when you put it next to the driver availability index that ACT provides, it really provides a lot of context to where these drivers have gone, because it's almost kind of coincides with right when we go negative at the beginning of 2022, you see this influx of for-hire drivers. So, the fleets have been, I guess you'd call it, I think you even mentioned it, it's kind of a haven for a lot of these drivers. So they necessarily didn't give up the trade. They're just finding a new place to do it versus, maybe running their authorities on their own. And I think, just my personal opinion on the authorities is that, that in and of itself in a vacuum probably at least can serve as a proxy for individual business level profitability. For a lot of these smaller fleets, owner operators, things of that nature, that led them back to, kind of becoming for-hire drivers instead of owner operators.
Thanks for joining us on Hit the Brakes podcast. Want to know more about today's episode? Visit fetchfreight.com to connect with someone from our team, get a quote, join our carrier network, and more. Check out the show notes below for specific links mentioned in the episode.